it's a big puzzle in markets. But look, we've settled on a couple of ideas. The main one that I would share with people is that when you have a time of great change like this, which is very pro-business in the United States, a lot of talk about building new factories, plus also shifting trade patterns, I think the financials will do pretty well. There's a big need for investment banks to step up and finance whatever activity changes are going to happen. And I think you've already seen that with JP Morgan on a tear. The other stock we like in that space is Goldman Sachs. And a third one that I would add to it is the International Commodity Exchange. We think commodity exchanges will do well simply because businesses all around the world are going to have to make and manage commodity price fluctuations and also currency fluctuations. And I think that that's going to be a very big effect of the tariffs, is the effect on currencies. We're witnessing a strong dollar environment, but we'll also see some interest rate volatility. So I think that trading futures is going to be the hedging avenue for many players. And so Wall Street in general, I think will do quite well out of the Trump presidency.
So I got to ask you, Kingsley, right now, how much correlation are we seeing between asset classes? If it is very tight and there is a lot of correlation, then it argues for even more for the need for uncorrelated returns, simply because too many things are tied together.
Yeah, absolutely. A good pointer of that is just the strength in gold at the same time as we're seeing strength in equities. So, it's unusual for gold to do well when equities are doing well, and that was the case for the S&P 500 last year, and gold running, a sack race together, essentially. And I think part of that is we'll probably still have loose financial conditions.
It's really interesting when you talk about running a sack race together. You could also put gold and the US dollar in the same sack, which is also kind of ironic normally because, they normally are negatively correlated. A number of the gold miners here in Australia, Kingsley, have been really pleasantly surprised themselves by how strong the price of gold has been as it now hits record highs and is approaching 3,000. Do you think it keeps on going higher? And would you be buying Australian gold stocks at these levels?
Yeah, yes to both. I think that gold will move higher. There has been a breakdown in those traditional correlation factors. The jury is out as to exactly why, but there are a number of factors in play. One is geopolitics. Remember that China and Russia are the largest producers of gold worldwide, but also the largest at the margin buyers of gold within the central banking system. So there's a story to be told there. Australia is the lucky third. So, we've got the gold that isn't Chinese or Russian origin. And so there will be some expanded production opportunities in Australia. The other thing I would mention is that we focus on the US dollar gold price, but, the Australian dollar gold price just looks sensational.